Ladies and gentlemen, you don't need to come from money. You don't need a suit, a Wall Street job, or a finance degree to become a smart investor. What you need is discipline, grit, and the courage to start. You see, investing isn't just for the elite, it's for anyone who dares to believe that tomorrow can be better than today. I started with nothing, just like many of you. But today, I want to show you how to turn something small into something powerful. Let's break this down into 8 game-changing steps. You're never going to feel ready. That's the trap. Fear will whisper, wait until you have more money, more time, more knowledge. But let me tell you something, the most successful people in the world started unprepared. And they figured it out as they went. A young man I met started investing just $10 a week into a mutual fund. Today, 10 years later, his portfolio's worth over $15,000. That's not luck, that's action. He didn't wait, he started, and so should you. Don't wait for perfect. Start with whatever you have, even if it's 500 rupees, even if it's $5, because starting is what separates the dreamers from the doers. If I asked you to play a game in a language you don't understand, would you win? Of course not. That's why understanding financial basics is non-negotiable. Words like stocks, bonds, ETFs, mutual funds, compounding, they're not scary. They're tools to build the life you want. Download free apps like Investopedia. Watch YouTube channels like Graham Stephan or Andre Jick. Listen to finance podcasts on your way to work. Every 10 minutes of learning compounds like your money does. Remember this, every investor you admire once sat where you are confused, overwhelmed, but willing to learn. Be a student of the game. Investing is impossible if you spend every rupee, dollar, or pound you make. You need to track your spending like your life depends on it, because your future does. The 50/30/20 rule is simple. 50% needs, 30% wants, 20% investing and saving. Automate that 20%. The moment you get paid, send that money to your investment account before you even see it. Out of sight, growing silently. One of my friends used this rule religiously while working a minimum wage job. 10 years later, she bought her first home with cash, all because she mastered her budget before chasing big gains. Don't chase hype. Don't fall for the next crypto rocket or meme stock. Begin with the basics: index funds and ETF exchange-traded funds. These funds spread your investment across hundreds of companies. That means less risk, more balance. Historically, the S&P 500 has returned 7-10% annually, way better than leaving money in a savings account. Warren Buffett once said that for most people, the smartest investment is a low-cost index fund. If it's good enough for a billionaire, it's good enough for you. Everyone wants to buy low and sell high, but let me be real, even the pros fail at timing the market. That's why the secret isn't timing, it's consistency. Dollar cost averaging is your best friend. Invest the same amount every week or month, no matter the market. That way, you buy at highs and lows, and over time, it all evens out in your favor. One man I coached did this religiously, $100 a month. Through recessions, crashes, booms, after 20 years, he had over $70,000. Not because he was lucky, because he was disciplined. Markets rise, markets fall, people panic, but panic is not a strategy, it's a trap. In 2008, when the world was falling apart, those who held their investments saw their wealth recover and grow. Those who sold in fear, they locked in losses. Emotions are the enemy of growth. You need a mindset of steel. Investing isn't gambling, it's planting seeds for a forest you won't see overnight. The market is like a roller coaster. Scream if you want, but don't jump off. Stay buckled in. Never put all your eggs in one basket, because if that basket breaks, you're done. Spread your money across different sectors, industries, and asset classes. Stocks, bonds, real estate, maybe even a little crypto. Just don't go all in on one thing. I knew a guy who invested everything in one startup. That company tanked. Years of savings gone. Another guy, he spread his money across real estate, tech ETF, and dividend stocks. One fell, 2 rose, net win. Diversification protects you from the unknown, and there's always something unknown. This isn't a sprint. It's not even a marathon. It's a lifetime journey. If you're looking to get rich quick, go play the lottery. But if you want to be wealthy, you invest slow, steady, and smart. The power of compounding works only when you give it time. $1,000 invested at 8% annual return becomes $2,000 in 9 years. But in 20 years it becomes over $4,600, and in 30 years more than $10,000. Wealth doesn't come from flashy moves. It comes from time in the game.